Thank you, Barbara. Good afternoon. Actually, I'm going to just deliver hopefully a short speech, hopefully not boring as well, and then David will take over to chair the panel. Good afternoon. As you know, this year, a significant number of African countries are expected to be among the top 20 fastest growing economies in the world. But despite that potential top performance, there are many challenges actually to sort of achieve those ambitious targets. And one of those challenges are really to have reliable electricity, not only for people, but especially for businesses as well. The investment required to achieve universal access to electricity over the next 10 years is about $65 to $90 billion per year. And as you may have noticed, in 2015, $35 billion were invested in the energy sector in Africa. And out of that $35 billion, only $7 billion came from the private sector. Therefore, there is a huge gap, both in terms of capacity, in terms of generation capacity, transmission, distribution, but also innovative investments into these innovative business models. I mean the distributed energy solutions. To meet this gap, more energy reforms are needed. And some countries have achieved good reforms and have attracted a significant amount of investments from South Africa to Morocco, or from Kenya to Senegal. A lot of IPPs have been concluded. But still, this is not enough. A lot need to be done. All project financiers, whether they're DFIs, commercial banks, or private equity funds or strategic investors, one of the key impediments to sort of delivering on this objective of universal access to electricity is really the lack of well-prepared projects. And often the problem is often lying with the government, but often also we see lack of credibility with the developers themselves, but who manages to secure good contracts but don't have that capacity, neither technical nor financial, and we would be running around maybe for 2-3 years to get partners. And that really needs to stop, and we should find a way to help the governments to build the capacity so that credible parties are in the game. And where we have credible parties in the room, we should not be sort of dancing around a contract for years. I've seen countries where the PPA negotiation has taken 2 or 3 years, and that is clearly not acceptable. And in the same time, the government or the country is paying the highest price per kilowatt hour, where savings are huge if those megawatts were actually delivered to the grid. DFIs also have a role to play. That is why at the African Development Bank, we co-created the Africa 50 with 23 African governments who are shareholders in the company, in Africa 50. And Africa 50, as you know, one of the line of businesses is to do project development. Maybe not only on a project-by-project basis. My understanding is that they'll be investing in platforms. And I believe that this is really the way to go. We have also private equity funds that are doing a great job in this area, including, of course, Black Rhino with Brian here, and also Abraj and others also who are here at the table. The FMO also backed a new initiative for renewable energies is also in the right direction, providing with Climate Investor One Fund providing various type of capital for various types of risk. We know that the risks are significant in project development, a lot of uncertainties. We know, for example, one of the big problems that we have is that governments can start a process and halfway change it. They can say, you know what, we are doing a tender, and you are gearing up to participate in the tender, and suddenly it's a negotiated deal. Or it's a negotiated deal, you start, you think you have your deal, and later on it is changed to a tender process, with sometimes rules that are not really some of the best rules. And that is a significant challenge. And the best way to deal with that is really, I think, for us, the DFIs, who have some leverage with governments to early in the game to help the government define really the process and stick to this process and use our leverage, because we have some leverage, including providing ODA money to those governments to really push so that whether it's a negotiated deal or it is a tender, that you stick to it. You don't change the rules halfway. What we now need is really to find a way to accelerate the projects. It's not just really having the capital itself, it's not enough, but it's to really push the governments to see the opportunity cost for not doing the project. Often the opportunity cost is not very clear. Not only financial opportunity cost, but social opportunity cost, and often also political opportunity cost. As President Adesina said in Davos, if the governments, the head of states want to stay in power, they need to provide power to the people. I hope that they will be more and more working with you, the developers, to really fast-track those projects so that they can develop and provide power to the people and stay in power only for 2 terms, not more than 2 terms, hopefully. That's only, it stays in the room though, by the way. Please don't repeat it somewhere else. I can get fired for saying that. Anyway, I'm going to leave you with the good hands of David of IFC Infra Ventures, hoping that the deliberation today will serve so that we can learn something and get some of the recommendations, and more importantly, before the next forum, to get some of those things implemented, with the help, of course, of our dear Hubert, who's been pushing for more platforms to invest in infrastructure. So, ladies and gentlemen, we leave you in the good hands of the panel, and have a good session. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.